The verse number 282 in chapter 2 of Quran says, O you who believe, when you contract a debt for a fixed period, write it down. Verse number 130, 31 and 32 in Surah Al-Iman of Quran says, O believers, take not doubled or redoubled interest, and fear God, so that you may prosper. Fear the fire which has been prepared for those who reject faith and obey God and the Prophet, so that you may receive mercy. Well, we are no one to judge Islam's view on core banking practices. But economy has no religion. And when economy is intertwined with religion, what happens is a Turkey. Hi and welcome. This is TFI Global, the foreign affairs and geopolitical analysis arm of the TFI Media Group. I'm your host, Atul Mishra. In this video, I will tell you how Erdogan, the president of Turkey and the wannabe Khalifa of the Islamic world, is smoking Turkey's economy with his Islamist approach. Let's begin. Turkey used to be a prosperous economy. In fact, it used to be a bright, shining spot as a liberal democracy and a NATO member with a high economic growth rate. However, Turkish President Recep Tayyip Erdogan's Islamist policies have destroyed the Turkish economy. Erdogan is a wannabe Khalifa and harbors ambitions of ruling the Muslim world. Therefore, everything in Turkey, including its economic policies, is being modeled on Shariah lines. This is leading to Erdogan going against the most basic economic theories regarding increasing interest rates and controlling inflation. In fact, he's fighting anyone who tries to put the Turkish economy back on track by pushing for higher interest rates. In Islamic tenets, riba or interest earned by depositing or lending money is considered haram or unholy. As per IMF's definition, Shariah does not allow payment or receipt of interest. This is why interest rates offered by state-backed institutions in countries like Saudi Arabia are really low. Erdogan wants to replicate the same model in Turkey without understanding its consequences. The leader of Turkey has de facto control over the central bank and has been a long-standing opponent to high interest rates. It is well settled among economists that interest rates must be raised in order to restrict inflation. But Erdogan believes that higher interest rates further pushes inflation. In fact, the Turkish president keeps cutting interest rates at regular intervals despite skyrocketing inflation in Turkey and a constantly depreciating lira. Earlier this year, Erdogan criticized the central bank for raising borrowing costs late last year. He said, "Whether they listen or not, I will continue my struggle." The Turkish president added, "There is one thing I believe in. We can't achieve anything with high interest rates." However, due to Erdogan's Islamism-infused politics, inflation has surged to double-digit rates. Lira has plunged and investors have taken the first flight out of Turkey. Yet, only last month, the Turkish central bank announced a full percentage point in interest rate. Nikkei Asia quoted Eric Mason, senior economist at Handelsbanken Capital Market, as saying, once again, investors were caught by an excessively dovish central bank. Mason added, in this case, there were clear indicators that a cut was to be expected given President Erdogan's speeches, as well as how the central bank had previously updated its guidance, shifting focus from headline to core inflation, arguably for the purpose of generating the official space for a cut. The Turkish currency dropped expectedly by 1.5% after the rate cut, hitting 8.8 lira to the dollar. Erdogan is in fact so engrossed in his Islamist economic policies that he cracks down on whoever seems to make any sense. Last year, Turkey's then finance minister and Erdogan's son-in-law Berat Albayrak decided to dump the Turkish president and resign from the key post. Also, Erdogan had fired Murat Uysal, then governor of Turkey's central bank, and replaced him with former finance minister Naci Akbal, a critic of Albayrak's economic policies. However, this year, Naci Akbal was also fired and Islamist Shahab Kavicoglu was appointed as the governor of the Central Bank of Turkey. After all, Akbal had committed a major sin for which Erdogan had to punish him. Akbal had announced 2 hikes last year. The first one, largest in 2 years, was announced during the last autumn. The second was announced in December 2020. The 2 hikes had raised the benchmark interest rates by 675 basis points to 17%. Interestingly, lira strengthened on both occasions and rallied by a healthy 14% in the last 2 months of 2020. There were also some positive signs of investors returning to Turkish stocks and bonds. However, the lira rally was really short-lived, and as soon as Erdogan's Islamist thinking got triggered, Akbal found himself at the receiving end. Erdogan is unabashedly bringing in religion in Turkish monetary policy. He rails against high interest rates in order to appease his radical vote bank. Erdogan has gone as far as describing high interest rates as the mother and father of all evil. He has also spoken of the devil's triangle that involves interest, inflation, and exchange rates. Erdogan is clear about following Sharia-compliant monetary policy, even if it leads to unsustainable inflation and a constantly weakening Turkish lira.